Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 1st of October. It's a new month here in 2020, and we're still watching the tech names. We're going to start with the Netflix, which isn't really the biggest titan of tech, but it's one that had an extremely strong trend day today and pushed quite higher. So we'll start with NFLX, Netflix. So on this intraday chart, we can see the movement going up, higher highs, higher lows, all those kind of things. And on our strong stocks list, this is stocks in the S&P 100, Amazon made that list too, but so did Walmart. So these are big market cap names. Facebook made it as well. And all this is percent change off the open. There's Boeing, Qualcomm, and Google. So let's go ahead and take a look at our comparison grid of the FANGs, which is just a fancy way to say the tech stocks or leaders of the tech industry. And that includes Facebook. All these are daily charts. Remember, we had the possibility for these stocks to push lower. They did not. They continued the uptrend with the deeper pullback. So just looking at these components here, which is Facebook, Amazon, Netflix, and Google, we'll swap Netflix for Apple in a minute here. But we see these higher highs, higher lows, and uptrends, and the strong rally off the pandemic or the COVID lows there in March. So we'll see these individually, but support has held. Netflix majorly held support. That's that 465 level we were talking about, 460, and it's pushing straight up. And Google, same thing. So that's kind of the context. We're setting the stage for tonight's video. Now I promised I'd swap Netflix for Apple, and here it goes. So Apple is also rallying. It's not that much different. For Facebook and Apple, actually all of them, but mainly those two, you did have this gap and go situation in July into August, and that led to a deeper pullback, quite as expected, like that rubber band effect. That which gets overextended snaps right on back. So that's where we are. Now, broader picture context or concept. Here's the Nasdaq. Here's the levels. We're taking a look, of course, at the profile levels and 11,000, 1050. So we've gone above these moving averages. We have just simply triggered a bull flag. This was the abyss, or still is. Doesn't change the fact that the abyss exists under 1050 in the Nasdaq. But the market looked at the abyss and said, not today, and traded higher. And it's actually done so in a very, very powerful way. So that's where the focus of tonight's video will be, on the tech sector. Our TheoTrade Monsters of Tech symbol, which is right here if you're interested in that information. Just copy and paste this either into a watch list or onto the chart. You can see the mathematics and the multiplication. You can do that just into your own charts and time frame. But it's the same picture. And what does this do? It averages each of these titans of tech or monsters of tech into an aggregate symbol. It's not that much different than the Nasdaq. And that's not that much different than the tech sector, which is XLK. The only thing different or unique about these monsters of tech is that Amazon is treated as a retail name. That's a big picture. XLY actually contains Amazon. But is it a website? Is it a commerce store? It's kind of in the middle there. Not quite like Microsoft, which is clearly a tech name. And that's the process we're looking at. So we'll take a look at individual tech leaders, starting with Apple. So there's the abyss. There's the return from the abyss. And now we're above all the support levels. And for Apple, that's going to be about 110 per share. So I want to draw similar trend lines just to get us in the same perspective. This is the pullback at the snapback. This is the break above. So Apple had that break above at 110. So we're watching these levels here, and if this continues above 115 where it is now, Apple and others do have the upside pathway. So that takes us back from the abyss and continues the bull market, strange as that may sound. And Amazon, remember, Amazon is actually a retail name, but it still is that strong stock getting stronger. So flags, pullbacks, and retracements, although that was much deeper than we would have liked. It was actually, strangely enough, on the dollar value, about the same dollar pullback as we saw in the tech or the pandemic. Certainly It's one of the scratch your head things. Amazon stock price has actually doubled, just about doubled from this pandemic low. But just putting that into context and perspective. Again, looking at the little flag trend lines, we had the break above at 3,000. And the key pivots right now about 3250. So just for reference, on the right side of my grid, I always look at the hourly chart, and that helps set up some swing trades or short-term intraday scalps. On the daily chart, that gives you the broader perspective and the broader narrative. And that's more for in-out spreads, vertical spreads, or duration positions that last 10, 15, 20, maybe even more than that days, or 2 to 3 weeks, maybe a month or more. Next up on the list, we'll take a look at Netflix. And that is the support. That's what we held in the past. So Netflix at least makes the most sense, or the most logical point, of keeping the uptrend going and putting it into context. Netflix didn't suffer that much of a decline because Netflix was not that overextended. There was not much to snap back like a rubber band for Netflix shares, and that just pulled it back to the 450, 475 print. And now we have a multi-day rally. It's strong. It's very strong. It's the strongest of the tech names percent-wise, but it is going up off those lows, and that's above the flag breakout. And then we'll take a look at Google. So Google shares did actually do what I expected, or I thought, or that little human thought process in me. I thought we're going to pull all the way from the 50 down to the 200 simple and then bounce up away from it. Well, that happened in Google, but not much of the other tech names. So that was an unexpected development that others could have pulled back more, perhaps should have pulled back more, and that would have given a cleaner type of entry. But that's why we look at the monsters of tech both as a conglomerate big picture symbol, but each one is an individual stock. So for example, Google pulled back the deepest. That fell from the 50-day moving average all the way to the 200. And it's a similar logic. Fall from the 20, hit the 50, hit the 50. Don't bounce off the 50, fall to the 200. And that can be little target trades for spreads and vertical traders. So Google actually did that. It's the only one that did that. And it fell from the 50 to the 200, held support, and that key pivot we've been mentioning was 1,400 per share. And now Google's up away from that. And it's not much of an impressive bounce. But in-out spreads or directional plays only look for very short-term movement. So that's sufficient to play in-out spread bullishly away from the support. And that's played out for those aggressive traders. So that's the main picture. We'll also look at Microsoft. It might not be seen as a monster of tech, but nonetheless is part of the equation and is similar. It got overextended into the August. It snapped back like a rubber band and then fell to support. And that key support level, this might be a little bit more like Netflix, and that it didn't really get totally destroyed on the downside. It just held support, and it too's bounced up away from it. So that's the main picture. That's the main idea. We don't know the future. No one knows the future. All we can do is plan the probabilities. And the trades we take are just expressions of that probability. I like trading from one level to the next, be it a moving average or from the average to the prior high. Those are pullback trades or just support bounce. So whatever your preference for trading style and aggression, the market, or at least these tech names that we're focusing on, peaked into the abyss beneath these levels, had a really decent chance to fall all the way down to the 200 simple, but couldn't even do that. And that actually is a more bullish signal than not, and keeps us cautiously bullish, cautiously optimistic, and maybe we skirted disaster that could have easily happened in the market. And it happened to Google, but we are bouncing off the edge of the other side of the abyss. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo update video for October 1st, 2020.